Hey, good afternoon, everyone. I'm just gonna wait 1 or 2 more minutes before we begin. Today is gonna be a short session, and we will be going through Aussie dollar. But before that, I think we can go through the setups that we took on Wednesday and Thursday, and see where prices are right now with gold and euro dollar. Um, So as we continue into this webinar, if you have any issues viewing the screen or have any questions, feel free to put it on in the comment section, and I will try to review those questions as we go along. All right. Otherwise, let me just go ahead with the introduction for today, and then we'll go right into the charts for Aussie dollar. My name is Sherman, and I'm an FX strategist. This webinar is brought to you together with Vantage. Okay. My background is in FX algorithmic trading, so most of the concepts that I'm going to go through are systematic trading strategies that you can actually code and automate. If you have any questions, feel free to reach out to my LinkedIn, and I will answer those questions as well. Before we begin, disclaimer for today's session, right? Any form of trading of such derivatives carries significant risk. Do ensure that you get independent advice on the signals or the concepts that we're going through today, and make sure that you fully understand the risk before you make any trading decisions. Okay. So let's dive into the charts. I'm going to change my screen now to the tool that we're using. We're going to use trading view as always. Let me new share. Trading view share. Okay, so this is trading view, and the instrument that we're going to be going through today would be Aussie dollar. So as always, I'll go through the key symbol instrument that we are trying to look at today, and then we can go through gold and euro dollar. Two of these symbols were what we went through in the previous two sessions. So it's good to review those setups as well. Okay, I'm gonna take about 5 to 10 minutes going through the indicators that we're gonna use to help us assist us in the trading setup today. So this indicator that we're using, it's called pivot points. Okay, so if you go on that indicators on the top bar, click on indicators, and you can search for pivot points. And basically there's a list of pivot point indicators that you can use. The one that I'm using is called Wayne's pivot. And the reason why I'm using this is because there are certain areas highlighted that can help us in our trading setup. Okay, so go ahead, add it in. You might want to add in a couple of the same indicator, but what's the difference between each of them is that under settings, right, hover around across the indicator, and under time frame, you can select the time frame that you're interested in. What I usually do is I'll have four of the indicator, starting from the hour, 4 hours daily, and then the weekly. Yeah. Can you guys hear me clearly? Can, right? Okay. So usually what we'll do is we'll start off from the highest time frame, and then we'll go down all the way to the hourly to identify the entries for the upcoming session or the New York session if we are in this block of time right now. So quickly go through the concept of pivot points. The pivot points are basically 9 lines that are projected based on the previous period's open, high, low, and close. The 4 data points, the 4 most important data points of each block will be the open, the high, the low, and the close. Okay, based on these 4 data points, you can actually project out these 9 lines for the next period. Okay, what are these lines, right? The lines, basically in the middle, there is the pivot point. That's the most important point. And above, you have 2 resistance level, R1 and R2, and 2 support levels, S1 and S2. Okay, and in between, we'll just call it M. So you have M1 in between S1 and S2, M2 between the pivot point and S1, M3 between R1 and the pivot point, and M4 between R1 and R2. Okay. So the idea is very simple. At the start of each session, right, we have 2 key areas that we are looking to target. Okay, so one will be M1 and S2. This is your target sell point, and we're just gonna go ahead and just label it as the D1 target points, right? Again, I'm on the hourly, but my pivot points are set to the daily. So basically, you can see every hour, each candlestick will represent 1 hour, and we have 24 of them within a block, which represents a day. So this is the start of the day. We start off from New York close all the way to the end of today's New York session. Okay, so this is D1. I'm gonna label it as the sell target, and we have another area which is M4 to R2, which will be our buy target zones. Okay, so there are 2 kind of outcomes or 2 kind of analysis that we can do before we look at the dailies, the movement within each day. So prices, 80 to 90% of the time, they fall within S2 and R2. So that's what we call a normal range, where the price falls within S2 and R2, right? Around 10 to 20% of the time, the prices will break below S2 or break above R2. Okay, that's when prices are acting abnormally. All right, and basically that will be what we are going to use to determine our trend for that period. Okay, so for example, right now we're on a daily pivot time frame. What we're interested in is to find the last movement that fell below S2 and R2. That's the first thing that we need to do. Okay, so if you look at it on the 12th of October, on a Thursday, prices broke below, out of the normal range, and it closes below, by the end of the New York session, it closed below S2. Okay, so this is abnormal. Prices were not supposed to behave this way. Prices were supposed to be within S2 and R2, but sellers overwhelmed the buyers on that day and basically push price down. Might be because of the news, or might be because of just overwhelming sellers in the market. Okay, so this is one of the zones that we're looking at. You can set it as D1, right? And you can do this exercise across maybe a month or so, just to identify where are the key areas to watch. Okay, so essentially, if you look to your left, right, what we're going to find out is, at this point in time, can we find a support level, right? And we can roughly determine this as a support level because price closed below, right? And so we can actually just draw this line out across this range here across, right? And just determine this as a D1. It was meant to be a support range, but now because of price being below this level, this will become a resistance range. Okay, so this is the kind of like a overall setup on a daily level, right? And of course, if you want to prepare the session for the upcoming session, we probably need to go down to the 4 hours or the 1 hour pivot time frame. Okay, Again, for me, because I've been looking at all of these symbols, so I know that I can skip the weekly, given the fact that we are in an overall bearish trend for Aussie dollar. But if you need more confirmation, I can show you how we can actually get that on the weekly basis. So if you are just starting out with this concept of pivot points, you might want to start from the weekly and then scale it down into the hourly. So the first thing that we need to do is we need to find out where was that turning point, right? Okay, so just want to draw your attention to this day. Okay, so on this day, the 10th of July, right? This week, yeah, the week of the 10th of July, okay, prices broke above R2 and closes above R2. So this formed a strong support zone for us. Okay. And one key thing to note about support zones, support and resistance zones, is that once this level has been broken, this will signify a change of character from what it was supposed to be a bullish narrative to a bearish narrative. Okay, so this usually happens at reversal points, and it usually happens at the end of the trend. Okay, so if you were on an uptrend previously, right, and this was the last attempt to push above the normal prices, right, in the event that prices break below, this will become a very strong resistance zone, and this will become the beginning of the bearish narrative. Okay, so far so good. So we can kind of highlight this as a weekly bearish zone. And just to take note that, if we were to ever reach back to this level, this is where we will be planning to sell. Okay. So price reacted to this. As you can see, when it comes back to this level, it reacted violently, move up. This should result in a higher high, but because of this break of structure or change of character, this became a strong resistance zone. Okay. So this is one area. The other area here would also determine that, prices fell below the abnormal range. And usually when this happens, we will want to look at the last candle that pushes it below this level. So usually this would be a good entry sell. This would be a good entry sell. Okay. Again, once you hit M3, the target would be M1. And because this still stayed within the range, your target sell will be M3, pivot, and your target will be M1. Okay, and then the same case, M2 didn't hit pivot and M3, the target would be M1. And again, this fell below S2, so this entry here, this order block here, would be your entry. Okay, so the concept is the same throughout, from the weekly all the way to the daily. You can see from here, okay, this became from a downside to a range. M3 was supposed to sell, did not form a lower low, and it broke above, causing this to be a short-term support level. So you can see that prices will react from this level, and then the following week, M3 sell to target your M1. M3 sell again, this would have targeted your M1, but it broke above M3 and retest M3 as the entry again. So these are all the concepts. I mean, the concepts are the same across all time frames. So you can actually apply it all the way to where we are here today. Okay, so again, M3 for this week, we started M2. Okay, when you start M2, the target would be M4. Okay, but because of the overall bearish narrative, what we are trying to wait for is a sell from M3. Okay, so M3 sell, this will be our target. Okay, in what case will we consider a buy trend, okay, for us to convert or shift our narrative to a bullish narrative, okay, we need to break above and close above R2, okay, something like that. Okay, and given that today's Friday, this is highly unlikely. That's another 200 pips for Aussie dollar. So we will continue with our bearish narrative, and this will mean that our target for this week is still M1. Okay, and if we are not able to hit M1, you can see that the projected lines for next week has already been projected, and you can see that the target for M1 is much lower. Okay, so whenever there is a lack of momentum within the week, the following projected values, your pivot points, will be smaller, and you'll be able to reach that target much quicker. Okay, so what we can actually do here is we look at the daily, okay, the daily analysis right now, and I already highlighted D1 here, which is our target for today, buy, and this support here for our target, right? So essentially what we have done is that what we wanted to do was to get to M3. So ideally we want to get to M3 down to M1, or M2 consolidate and we hit M4 as the target range. Okay, but this is unlikely because prices have broken below M2. So in such a case, right, then we would say that the most likely outcome would be that we will do something like that for tonight. Okay, so reason for this is because we have already broken M2. M2 was supposed to be our buy zone, right? M2 failed, it broke below aggressively, and so this will be the order block that we're looking for to sell down to M1. And again, we can go down to the 5 minutes time frame, and we use the 4 hours pivots to plan our move. Okay, and see, when I was drawing this point on the daily pivot, it coincides with the 4-hour M3. Okay, so this looks promising. What we potentially want to do is something like that. Okay, on the 4 hours time frame, we want to go this way. Take some liquidity. Again, why do we always need liquidity? We need the liquidity to get down to a lower point, right? And then sell. And I'll reduce the size of this line just so that we can differentiate between our 4 hours idea and the daily idea. Okay, so the thicker line will show the idea for the daily time frame. So no doubt this range here is going to be where we are looking to sell. Okay. This we can call this the POI, the point of interest. Okay, point of interest. And basically right now we're just waiting for the next session to see if price do in fact close above and enter this range before heading down again. Alternatively, if within the next 40 minutes we can close below S2, okay, then we will not be able to reach this level. This will become our M4 resistance, and then we'll basically just do something like that. Okay. So again, M1 to S2, if you can close below S2 by in an hour's time, then this will become our new POI. And this is where we will sell, where you'll retrace back to this level and then hit down. So these are the two setups, right? We can look at the RR for this trade here, which will be 7.44. And the other trade would be from here, just above just above here. And we drag this down to the same level. Okay, it would be best if we can actually target the middle of the daily zone, right? But if you're conservative, then you have it will target at the top range of the daily target zone. Okay, so 9.42 for this conservative sell, 6.458 RR for this aggressive sell if prices break below this level. Okay, so yeah, that's kind of like the setup. What will we be looking out for a buy? Okay, so for us to get into a buy bullish narrative on the 4 hours, okay, we will need something like this, right? And that has to be we need to take out all of the liquidity that we see here, okay? And this is possible. This is very possible, okay? This is our trendline liquidity, okay? And so breaking above all the way up above R2 to the top of the range, right? It's possible as well. So in that event that we are breaking above this, right? The daily target is here. And so we would have a good trade somewhere around here. And our target would be this level here, the middle of today's target, okay? Yeah. So the entry 6.326 for a buy if prices breaks above the next 4 hours R2 and we test the R2 here. Then we'll get to somewhere up here. Okay. But because we have already broken this daily resistance, right? So prices are coming up in any case. These two scenarios requires price to reach to at least 0.6313. And in the rare scenario where prices within the next 40 minutes break below to 0.629 or anywhere below 0.6295, that will be the only case where we will sell at this lower range. Okay, so it's fine that prices are moving back up, right? If it goes back up, it's fine. That's expected. And then what we want to do is for this pattern to happen, okay? Form a higher high, higher low, and a higher high again, and do a change of character below the previous low, and then we take the 50% discounted level or premium level to sell down. Okay, so let me just remove this point here because it looks a bit confusing. This point here, and we remove the 4 hourly since we already have the idea. Okay, so the first trade will be selling at 0.63140 with a stop loss above that point of interest. Target would be 0.62731. The second one would be that if prices break below 0.6295 by the hour, then we'll look for a retracement back to the POI and we sell again. Otherwise, if prices break above this point of interest and closes at least to 6.3355, we're looking for a retest and then we buy again. Okay, we have 5 more minutes. I'm going to go through gold, which we spoke about previously. So yeah, I mean, gold this week has been really good to us, right? Our analysis have all came through, right? So there were no indications of a sell, right? There weren't any S2 being broken. So our bias was bullish all this while. And again, the idea was that prices will hit 1992 before we look for a break below any S2 on the 4-hour block and change our narrative to bearish. Okay, so the target as expected, nothing has changed. If you open up the weekly pivots, you can see that right from the start of this week, the idea was that this was the target. 1992 was the target. It just made a really nice move up to. There wasn't any move down to M2 or S1 to second guess it. So all this while on every time frame, when you look at the pivots, it's just buy signals, right? So I think we mentioned about 1942 being the critical zone, right, for us to take this liquidity and bounce up, but it did not happen, right? In the end, what happened was this push up, and so it was very aggressive, right? And you would have caught on the 4 hours, right? 4 hours here, we have caught it already. This was the break out of the 4 hours, right? And then as you can see from here, right, none of the S2 were broken, right? S2 since the start of the week, every S2 was clean. There wasn't any price dipping into S2. It's clean. So there will not be any sells until S2 has been breached. Okay, so say for example, next 4 hours, for us to actually turn bearish would be something like that. This is S2. We need to close below S2 before we look for sells. Okay, so as long as S2 for that particular block is not breached, we will not be looking for sells. Okay, so same thing for daily. Daily is much it's much further, so probably will not see this. We might if there isn't any major news tonight. So the chances are very low, but not zero, right? So but the concepts are the same. It has to break all the S2s, close below S2 before we start looking for sells. Okay, so goal is buy only for the rest of this week. And I think the last one that we might be interesting would be SPY. Did we use this? Okay, we did use this. Okay. And this was drawn on, I think, 18th of October, right? 2 days. And again, as what we have mentioned, all of these points are non-repainting. So they just happen to appear, right? And they will not change whenever prices change. Okay. So once prices closes for the period, it's set in stone, right? Our idea was that we're gonna hit this weekly. If you look at the weekly here, right? This was the M1 S2 price gap below, and so this became our resistance. It tapped in nicely, right? And then the target for tonight, for this week actually, will be this area here, which is 422.85. Okay, and if we look at the 4 hours, why did we jump from weekly to 4 hours, right? Because we're just interested in the pattern for the next upcoming session, right? So there won't be any movement until the end of this session, another 5 more hours, and then we will have the 9 p.m. Singapore time pivot. So ideally, right, you can just drag this over. This was drawn previously, so we can just reuse it, right? And so most likely pivot down or pivot to M3 down. Okay. Yeah. Right, so same thing here. This was yesterday. This was the first session. This was the PM session. And you can see from here, M3 down, or from here, pivot to M1. So it's the same pattern throughout, over and over again. This was a little bit weird for this 4 hours. Once it broke M2, right, the idea was you'd be stopped up, but you could have taken another M3 down. Okay. Likewise, if you miss this, then the next 4 hours block would have given you an opportunity. Same thing here. Broke below S2, target was M3, M1 was the target, or aggressively pivot down to this level. And because of this weekly humongous resistance, all of the subsequent ideas would be bearish. Okay, how do we get a bullish narrative? 4 hours, it's high. Okay, it's gonna be tough. First four hours into the trading session, we need to break above the 435. All right, so we just need to follow what's easier, right? So this was the target. We have been building this entire trade since the start of the week. So the last day of the trade, it's much easier to just sell and hit our target zone. All right. When do we get signals? So I'll be here 3 times a day, 3 times a week. Sometimes before the New York session, sometimes before the Asian session. And for every analysis, I will give my opinion on where prices will be hitting and how we go about this setup. Okay, so for example, this setup, I would just say M3 is our target, right? And in fact, if you're conservative, you can actually put price above. I mean, the stop loss is going to be huge, but this will prevent you from being stopped out. It's still 1:1 ratio, but we know that if prices were to break above 435, which is highly unlikely, you know that you're wrong and you should get out of the trade. Okay, this is an aggressive entry, and rightfully so, because we have been building this sell since the start of the week. So yeah, M3 seems plausible, right? But otherwise, if you are seasoned and you know above R1, that should be fine. And you get 1:4.4 ratio. Okay, so good stuff. I see gold moving a little bit more good now. So you can see that the idea is the same, right? 80 to 90% of the time, prices are going to fall within R2 and S2. So whenever it hits M4, whenever it reach R2, it is going to show a retracement, right? And the key thing to note is that the timing is very important. When will prices break above R2 and S2, right? It's usually event driven. So there might be some news, or there might be some out of the blue bombings here and there, right? So then gold prices will spike. But you can see that, we are approaching this. This is not a pattern where we're going to see a reversal anytime soon. So the idea is always pivot up to this point for the next 4 hours, M2 up to this point for the next 4 hours. And this coincides with our 1992 target, which is our weekly target, okay? And for us to actually go bearish, we need to form the change of character, okay? And it's usually below S2. All of these lines are set in stone once it starts the first 4 hour block, this 4 hour block, the prices will not change. So you will know what is the limit. So what do I mean by when it's set in stone, you will know exactly at which price gold needs to break below before you start looking at sells. Because some of you guys might be some of you guys might follow ICT or follow SMC concepts, right? And usually people are not aware of where that change of character is going to be, right? Is it this? If it breaks below this, is it a change of character? If it breaks below this, is it a change of character? So the pivot points will help you. And it usually coincides with the ICT SMC concepts, right? So you might see this as an order block here. Again, M4R2, this becomes a natural order block. And for us to become bearish, again, break below this order block or break below S2, which basically coincides with the same point. So yeah, it doubles up. Okay, so that's all for today. Thank you guys for joining, and hopefully you are able to get some inspiration from today's session. Feel free to reach out to me on LinkedIn if you have any questions, and I'll see you guys again next Wednesday. All right, see you guys. Bye-bye.